Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, October the 3rd. Well, markets try to rally early on, first thing in the morning, rally for the first 25 minutes or so, and 15 minutes or so, and then rolled over and basically flagged making lower lows most of the day. Now, we've had 3 consecutive days like this, and which is telling me volatility is picking up, which also tells me that we have some sort of a top forming. Now, tops obviously takes longer than bottoms, but I just wanted to bring that to your attention. Now, I want to get to the charts because I have a lot to show you. Nothing really has changed, but it's just something interesting to see that that these patterns, these bearish patterns, have not triggered, but that doesn't mean that we can't look to short a weak stock in a weak sector. And that's what I want to show you tonight. Anyway, we'll start with the bar chart momentum index. As you can see here, guys, we're really basically neutral. I'd like to see this getting up into the 101.5, 102 area. That would get us in the overbought state or, of course, the oversold. And then usually the next day we usually get some sort of a snapback. But we're right in the center. So the NYMO, which I'm not going to show you because really nothing has changed with the NYMO and the bar chart momentum index again. But I wanted to bring this to your attention. I haven't seen this, haven't shown you this chart in about a week or so. Now, 5 minute. As you can see here, gap up, faded, gap up, faded, gap up, faded. So again, the last 3 days, very, very choppy sessions. Very, very choppy. However, every time when the market ends up in this area, as you can see, we get a little bit of a bounce. And this was just pure short covering, nothing more than that. Now, we do have a little bit of a downward channel. You can call this a bull flag, if you will. You have a little flagpole, and then the downward channel is your flag in itself. A break above, a back test, and then go higher is definitely in the cards. It can happen. But again, it is a 5 minute, so as you know, they're more a little more of a whipsaw. So I want to dial that down. I want to get that into more of the 15-minute, 30-minute chart, which I'll show you. All right, so the spiders. We'll use this as our proxy. Head and shoulders, I mentioned this to you yesterday morning. And as you can see here, still valid. Neckline still comes in at 143.35. Our bear flag pattern is still valid. As you can see here, tested that lower trend line of the bear flag. And then we bounced into the close, right into that 20-day moving average of the spiders. Volume a little bit lighter than usual, than what we want. But again, we're getting a little bit oversold. Now, we can unwind this oversold reading in these indicators by just kind of hovering around here. So that's something to think about too. So if you don't think that we can test the highs, I would say think again. It just seems like the market has a bid to it. Every time it wants to sell off, and you can just see this in the last, here's a 30-minute chart. So here's what, 5, 6 consecutive days. Rally, bid, bid up, bid up, bid up, and then again. So you can see that this level is really key. Whoever it may be, a large hedge fund, mutual fund, or whatever the case may be, is looking to prop the market up. It just seems like this area here is a valid area, and quite so. Look at the volume profiles. So if you do your volume analysis, look at this weak area here, because if we break this area, 143.35, you're going to go right to the B line of 140. Okay, and that's going to be easily done by 140. You might have a little bit of trouble getting through that 140, 175, but that spiders will usually will end up around the 140-ish area, and then we will look to reevaluate. But again, just showing you that head and shoulders pattern, left shoulder, head, right shoulder. That's a 30-minute chart, and we'll dial that down, and we'll get that right into the 15-minute chart. Do a Fibonacci retracement on here from right up the highs to here. We've already retraced 61.8% retracement off the highs. So that is a valid spot for a bounce. So I just wanted everybody to keep that in mind, not looking to go short. Now, I like to keep these lower high formation, as you can see here, lower high, and let's just grab a little downtrend channel, and look what's happening. We're right here. We broke back up, we failed, and look at what we're coming right approach here. Little confluence area of resistance, so 144.65, 70, a break above that, and a little bit of a back test intraday would have me looking to buy stocks. And that's really what I'm looking for tomorrow. And if not, of course, the lower trend line of the 143.82 would get me looking to start selling stocks. Actually, a break above this area here, that 143-ish area, I'd be looking to start actually swinging short, taking on some positions. Small, just to get started as a starter position. So that's going to be my target area here, and then, of course, the ultimately to add to a short from here would be the lower 143-ish area, okay? So that's the 15-minute chart I'm going to be looking at in the coming days. Now, I mentioned this morning, risk clearly looks off. We have sector rotation come out of the high beta names. A lot of Google, Apple, Lowe's today. And then, of course, Apple had a snapback, and I'm going to show you the chart today. We had a nice little call in Apple. A lot of the guys took a lot of the followers started trading Apple. They actually took a nice little long today right off the 50-day moving average, and I'll show that to you. But JNK, high-yielding bonds, right, junk bonds. Look at it, started selling off before the market sold off right into the 19th, 18th of September, and that was sitting right on the 50-day moving average. So a bounce back to the 20 would be normal, and then a continuation lower, and a break below that 39.85 would really have us looking to really start getting aggressively short. Now, again, you can look at this as an ETF, but it's a great gauge of risk, real great gauge of risk. Same thing with XLP, which is consumer staples. And if risk was clearly on, this XLP really should be making lower lows and lower highs, and it's not. It's hanging right at the highs here. So another telltale sign, hey, you know what? We might be taking some profits and moving them into some safety haven stocks, sectors, what have you. IWMs, clearly head and shoulders pattern recognition from our other indexes, and classic bear flag. Bear flags are all over the map. Now, they haven't triggered, so that's the key, right? They haven't triggered. We don't want to just go run out and just short the market. We don't want to do that. We want to take objective shorts on weak stocks, weak sectors that are relative weakness to the market, and then you can really have a better chance than looking to short the market itself. But we do have some weakness coming in the last couple of days. But look at the volume here today. Really, volume really stinks if you're looking to short the market. I'd like to see volume at least be up here. So we're half, 22 million versus 40, 42 million. Not good. That's not what I want to see if I'm looking to short the market. But again, nonetheless, we're in this channel, in this bear flag, so we're going to continue to monitor what's happening here. I mentioned we have a real sloppy bullish falling wedge in the transportation sector. Rightfully so. We are oversold here. MACDs are widening here. Now we're starting to make little higher lows off the histogram. Again, maybe a break back to the 20-day moving average and then fail again is probably what's going to happen. And that might even put a little bit of a bid in the market and try to have that market try to rally, make it a little corrective, and then that sellers would step back in again. SMH, again, guys, clearly risk off. You could see that, okay? Semiconductors coming off, pennant formation here right down at the low end. Even if we bounced into this 20, look at this. We have a 20, 50, and 200 stacked right above each other. Very, very heavy resistance. Look at the volume profiles. Again, lots and lots of resistance. So it's really going to take a miracle or something really, really positive to start moving these semis back up north. Apple, 50-day moving average. Somewhere around 230 or so, I said, look, guys, I think it's a good time to look to buy some Apple. First touch at the 50 and coming off the highs of 705. Yeah, why not? I mean, it's a silly trade. You have to take a little shot here. Maybe $1.50, $2 below the 50-day moving average. But again, still showing some weakness here. Now, if we take this out, you take the simple trend line analysis here, you're going to see 630. So we look 645, and then of course 633. And then right around this area, 630. So keep an eye on it. But I think we get a little follow through for tomorrow. And once we get to that 20-day, it's going to be a do or die for Apple. It's either going to roll back over or it's going to at least test the highs. So we're going to look to we'll keep an eye on that as well. All right, last chart, guys. Qs again. Not really a head and shoulders. Head here, maybe left shoulder, right shoulder. Yeah, you could say that. It's just a little sloppy for me. But again, definitely bear flag here. Volume was a little bit great, but again, what Apple does, Qs are going to follow, so just keep that in mind, all right? But I'm excited because we see a lot more volatility happening, a lot more movement, a lot of sector rotation where we were just stagnant for literally 6 to 8 weeks, really doing not much of anything. But I do see a lot of opportunity coming to play here, guys. And remember, seasonality weakness is upon us, and we should have some weakness going into at least the third week of October. Usually the end of the fourth week of October starts picking up and buyers start stepping in for that Santa Claus rally. Now, it doesn't have to happen, but we want to know what our trend is and what our pattern is when history repeats itself, okay? Just keep an eye on, and just want to give you guys a heads up. Have a great day, everybody. Please use your stops because it is a crazy market out there. We want to make sure keep our pallets dry and ready for the next big move. Have a great day, and I'll talk to you tomorrow. Take care.